But yeah, with my packages, I try to design my packages to where the middle package is the best looking one and the least amount of work. So I try to maximize profits, minimize capacity, essentially, with that middle package.
If you'd like to earn CPE credit for listening to this episode, visit earmarkcpe.com. Download the app, take a short quiz, and get your CPE certificate. Continuing education has never been so easy. And now, on to the episode. Hello, everyone, and welcome back to the show. I'm Blake Oliver, joined today by Logan Graf. Hey, Logan, how you doing?
What's up, Blake? Hey, everyone.
So great to have you on the show. We're talking today about getting ready for the 2024 tax season. And Logan, you just did a live stream on your YouTube channel all about this, what you're doing. I love the transparency. You are so open about what you're doing in your practice since you started it. I believe that was 2020. You went out on your own and started your tax practice?
Yes, sir. 2020 launched about in the summer after purchasing some clients from a previous firm I used to work for. And it's been great so far, having a great time.
Your firm is the Tax Graf, or the Graf Tax Co., PLLC. You are a CPA. You're based in Austin, Texas. You've got a master's in tax from Texas Tech. And tell me about your firm. You were on your own. It was just you. Is that still the case?
Yeah, so right now I have a contractor that has pretty much been with me from the start. And I actually used to work with them at my first job. And then I just hired my first employee over the summer, Gary, and completely transparent about that process as well in some of my videos. So like I'm an open book when it comes to running my firm. No secrets here. I think that's what I just put on my YouTube description.
No secrets. That's great, because I feel like a lot of times when we talk about our firms in the accounting profession, we always there's this tendency to I don't know, make everything look better than it really is. And when I had my firm, I know that a lot of it was like sort of an organized chaos. And but people don't, that historically haven't wanted to share that aspect of it, or even stuff like, how much do I charge for my services, or how much money do I make? And the video on your YouTube channel that really caught my attention when you first started doing this was you shared exactly how much money you made in your first year in practice. And I'd never seen anyone do that openly before. And it was hugely popular. And I found it fascinating.
Y'all plugged it too. I know y'all did. Y'all talked about me the next week on your podcast. So that was really cool. And it was wild doing it. Like, I guess I didn't really realize what I was doing at the time, because I told my wife, I was like, hey, I'm making a video about like my financials and how much I money. And she's like, wait, what? Are you crazy? And I was like, wait, should I be doing that? And had a moment of like, oh no, should I not do this? But I was like, shoot, I think it's pretty cool. So no one else is doing it. So why not?
Well, I feel like it's important. Somebody has to do it, because one of the best things about accounting, and the reason I got into it as a career changer, is because you can make really good money and you can have actually really decent work-life balance if you set up things right. And, I was a musician, right? And so for me, like getting into bookkeeping and accounting and technology, changed my life. I think more people need to know just how good a living it can be. And you did pretty well in your first year.
Yeah, it's been a while since I've made that video, but my first year, I think I grossed $90K, and I think I took home more money, a decent amount more money than I had made in the previous year as an employee. So I probably grossed 90, took home 60, 70. I don't know, costs were a lot less back then when you're smaller, but it was amazing. And then the next year, I pretty much doubled the revenue, which was crazy. And then this year, like it's going up even more, which I'm super excited to make the 2023 how much money I made video. And I think I think I'm just gonna keep doing those videos. I don't know, because people are like, well, once you get to a certain spot and you have employees, that could cause some drama with them seeing how much money you make. But I don't know. I just love the transparency, and I think other people appreciate it too. And it's such a good video to inspire other people. I'm a normal person. I'm not like some Alex Hormozy or Jason Stats where I can just like chug out work
Print money.
and print money and work so hard and focus. Like I'm a pretty lazy person. I consider myself a lazy person, except between January and April. So, if I like, it's funny. Jason commented on my last video, my yearly financial video. He's like, if Logan can do it, you can do it too, and that's completely it's completely true.
It's funny, but it's true, right? It's like, I mean, it's not out of reach. And
Yeah.
I think you do undersell your abilities, Logan. I just want to say, like, it's not easy to be a YouTuber and to do high quality videos like you do. And so congratulations.
Oh, thanks.
You broke the 2,000 subscriber mark. You've done, it says 73 videos here on your YouTube channel. That's a lot.
That is a lot. I don't know how I did that.
So listeners, you can pause this right now. If you're at your computer, go subscribe to Logan, search Logan Graf.
Thank you.
Graf, or go to, the username is Tax Telegraph.
Yeah, that's me. And I'm also planning on launching another channel in 2024 that's just tax. So the Tax Telegraph brand has like morphed since I started it. And so I feel like I have to distinguish myself more and have more of a tax side and more of a firm running side, because the don't really mix. Because my audiences I've realized my audience is mostly here for watching me run my firm.
Mm-hmm.
There's still a lot of people that like the tax content that I produce, and I still want to make that. But I think having a more specific channel, 2 specific channels would just do better over the long run.
Yeah, makes sense. Tailor what you make to your audience, which is actually great. Just general marketing advice for firm owners, like know who you're talking to, right?
Mm-hmm.
And that's what you're doing there. Well, let's talk about what you're doing to get ready for 2024. You are a content creator and you're dedicating, when we saw each other at QuickBooks Connect, I think you said a day a week now to creating content. So that means you've got to be really efficient the other days running your practice, especially during tax season, because I assume you're going to keep doing the content even while you're doing the returns? Or are you
That's
taking
the
a break?
thing. I don't know. So I got Gary now, and he's going to help me out tremendously. So if Gary helps me save enough time, I'm going to create content, because it hurts me not to.
Mm-hmm.
But last year I didn't really create too much content during tax season, and so this will be a new year to new situation where hopefully I have more capacity, and that's the goal, to continue a video every week. And if I'm creating a new channel, so it could be 2 different videos a week, I don't know. So I'm really considering with the new channel just doing it completely different, where maybe I hire an editor and let an editor edit the video, because it's a lot of work. I'm sure if you edit, like,
Oh, I remember. I did it for years. We have an editor. Maybe we could help you out.
Yeah.
So
Please.
people don't realize that. Like, then, and just side note, like if you're starting a podcast, you're starting a YouTube channel, budget like 4 to 5 times as much time as it takes you to record that video to just edit the thing,
Right.
at least to start.
Yeah.
I mean, my podcast, I dedicated a whole day to it.
Wow.
Because I had to learn how to do it, right? I had to learn how to edit. And eventually I got it down to like a few hours, but even then, that's a lot of time when your time's valuable. So we're gonna sort that out for you, Logan.
Okay.
I want to make sure that you can keep doing content.
Heck yeah.
Awesome.
Yeah, that'd be
I'd love to
great.
help.
And I've heard once you get an editor, that completely changes the game for you. So it's just that
It does.
big step for me, because I enjoy the process of it. So
Yeah.
It's not something I want to give up really.
It's not that different than hiring staff, actually, to help you with the bookkeeping or the tax work. It's hard to let go at first.
Hmm.
But then when you do, when you finally make that leap and you can let go and know the quality is going to be where you want it to be, it's such a relief.
Yeah. Yeah. Okay. That's good to know because I'm
Yeah.
entering into that space now.
Well, let's talk about the tax side of things. And in terms of the mix of your services in your firm, is it all tax? Do you do any bookkeeping work or client advisory or client accounting services?
Yes.
How,
I'm probably like 75% tax right now, where my income's coming from, and the
Mhm.
rest bookkeeping, accounting type services, advisory type services. And I'm slowly growing the accounting services side and reducing the tax side. I don't know. Like people keep signing up to get their tax return done, and I keep raising the prices, and it's just like, all right, well, we're just gonna keep raising the prices because I need more time, and if I'm adding all these 1040s, that's gonna not help my time between January and April, or the rest of the year. Even though I tell new clients, to expect to be extended these days, so I guess that does help. But
when you started, what were you charging for a tax return?
yeah, I was probably charging like 450 when I first started, and it I think I went up a little bit. That I started 2020, mid 2020, and then like closer towards the end of the year, I probably bumped it up to like 550 or so, and then maybe like in the heat of tax season, I might have bumped it up a little more, and then so I'll bump it up in stages almost, and it's basically I get to a point where like shoot, like I don't really want to add a new tax client, and but I will at this price. And so
Yeah.
it's also all about like supply and demand really is how my pricing is, which I don't think a lot of accountants go by. Like they kind of
No.
go by what's the guy down the road charging. And like the demand is there for me because I have another CPA down the road that refers to me exclusively on his website. And guess what? He lists his minimum. Not many other firms do. He lists his minimum like $1,500, and mine's like $1,200 right now to get in the door. And so I look like a steal. And he says he's completely filled up.
Wow.
And so it's
Let's
almost
see.
like, go ahead.
Well, you started at $450 for an individual return, and now you're 3 years later up to 1,200.
Yeah.
Wow. Yeah. And then that's incredible,
Is
Logan.
that
Like I
400%?
mean,
I don't know.
yeah,
I can't do math. 300, 400%.
I guess 3 times as much, right?
Yeah.
So whatever that is, 300%. Yeah, that's amazing. And you're doing it, and you're not getting. I mean, you're still getting clients, right?
Still getting
So,
clients. Like over the past few weeks at that 1,200
mhm.
mark, advertised, I've had like 5 new client meetings show up. And guess what? I charge for new client meetings too. And I don't credit that fee back in. So it's almost like new client meetings are a revenue stream. And I've thought
Wow.
about having a service line where I just review your tax return. So like taxpayers that have their returns done by other professionals or that do it
Hmm.
themselves, and they just want like a look through, like someone goes through it and makes sure like it seems all right,
Yeah.
and charge like $300 for that. I don't know. And have some caveats like, hey, has to fall under certain jurisdictions. If it's a Ohio return, good luck not doing that. But, if it falls under certain guidelines for the return that fits my expertise, then, maybe it takes 30 minutes to an hour to review it. Maybe they provide some context for their work papers on how they did it so I can, follow along. And then provide some sort of summary on the back end, so they know if it's right or not. And then if I see anything wrong, well, I just created some work for myself potentially, and like, hey, here's how to fix it. Here's how much it
Hmm.
would cost. So I'm really curious about doing that. And I
You
was,
said you've already started doing you charge for a consultation initial.
mm-hmm,
How
mm-hmm.
much do you bill for that?
I do 150 for 40 minutes.
Okay.
And I actually had it at 200 at one point, and then no one was scheduling with me. I
Right.
was like, okay, I think that's a little high, so we'll drop it down a little bit. And that's okay. At the time, I was like, if no one signs up, it's perfectly fine.
Right.
And
Well, you're paying attention to the economics of it, the supply and the demand, right? If nobody's buying, lower the price, see what happens. Yeah,
right,
it makes
yeah.
sense.
So it's a 40-minute meeting,
Yeah.
and I do prep. So I collect their up to 2 tax returns, recently filed tax returns. I'll review them and make
Yeah.
sure you know, they look okay. Sometimes I'll find mistakes, which is awesome. Sometimes I'll be like, hey, these returns are good. And then I also make sure like their returns are within like the type of returns that I want to prepare, so I can get some clues on their
Right.
activity. And that helps me be able to price them well. I do like to price based on the customer versus I think Ron Baker used to call it like price on the portfolio. So if it's like, a person that makes a lot of money, I'm not going to give them a fee the same amount as someone who makes way less money, essentially. And just like the risk involved with preparing a return for someone that makes a lot more money is a lot more higher. And there's a lot
Yep.
more value to them when you prepare the return, because they have a lot more opportunities to save more money, and their savings goes a lot further because their tax rate's higher, and their time is valuable, so they don't want to be wasting their time.
So we're already into pricing. And in your live stream on this topic, you mentioned that you start preparing for the new tax season by looking at your client list and looking at your pricing. So walk us through your thought process on that. When you analyze prices, how do you decide if you're going to increase a client's fee? You said it's
Mm-hmm.
individualized. Like, I mean, how many clients do you have? It might take a lot of time, or does it not?
Yeah, so during tax season or while I'm preparing the return, I'll make a note to where I'll see what I'm billing them at, and I make sure like, okay, was this worth it to me? Like the amount of work I'm spending on this return, the amount of emotional energy I'm giving them and strain potentially. Maybe they're a difficult client to work with. Am I having to follow up a lot with them? Do they follow instructions well? And then I look at their price, and if it doesn't match up and is not valuable to me, then I'll write down that price, what I think would be valuable to me, and compare it to what I'm charging now, and somehow bridge the gap there a little bit. And so I've done this the last couple of years. So 2022 is when I did a huge tranche of clients. Like I'm looking at my spreadsheet,
So
and
you took notes last year while you were doing the returns, and decided basically what it should be this year already.
yeah, yep, exactly. When the emotions are are there,
Yeah.
and
When you're feeling the pain.
when I feel the pain,
Yeah.
because now if I were to look at it and be like, oh, it's okay, I'm sure
Yeah,
it's
it's easy.
okay.
Yeah, exactly. After the marathon, right? It doesn't feel so difficult.
Yeah, yeah. And so 2022, I did like over 40 clients where I sent out a price increase. Average increase was 50%.
And
And
like, what percentage of your clients got a price increase?
technically all of them,
Hmm.
well, like some got a standard 13%, and some got like a $300 increase, $200 increase. That was kind of the average, like around a $300 increase, which is pretty big.
Okay,
Uh,
so when did you tell them you're going to increase the price for next year?
so so this year, are you talking about this for
Yeah,
2023?
so a 2023 tax year, right?
Mm,
You're getting ready. Like, have you already told them that the price is going up, or is this something you're doing now?
yes.
Okay.
Yeah, I was ahead of the game this year, and I knew what it took to send those emails out. and I wanted to do it sooner versus later. Last year I did it. It was like more into, I think I maybe sent it out. Yeah, I sent it out in November. I guess around this, like I'm looking at my notes, and I sent
Mm-hmm.
out emails like exactly 1 year ago of price increases. So this year I sent it out at the end of October, and I said, you got 2 weeks to respond to tell me that you're out. I said, I would appreciate if you told me by this deadline if you're out. If you're in, you don't need to respond. And two people, I did a way less, uh, like the number of clients that I increased by a lot, or way less this year because a lot of it happened last year.
Mm-hmm.
And so I only did like 14 or 15 this year, and only two people have said that they're leaving. I expect three to not tell me because people just do that.
Yeah.
They just ghost you.
Mm-hmm.
So, and I think if three leave, so right now I've lost about $1,200 of revenue from people saying they're leaving. The total increase of revenue that I'm gaining is $4,700. So I have $3,500 of work to leave before I actually lose money from the price increases. So that's the beauty of price increasing
And now
the
you've
top
got
line.
capacity.
Yeah. And then you replace those with people that are paying twice as much.
Yep.
So one new client could probably replace two clients that leave, which
Yeah.
is makes you way more efficient.
Yeah. When you do the math on focusing on price increases versus focusing on cost reductions, the price
Mm-hmm.
increases are always where you want to be. It makes such a huge difference.
Right.
Yeah.
And I'm still like, it's still an emotional process to do, and I'm still like not charging as much as I would for a new client. Like I haven't
Yeah.
ripped the band-aid completely off because it's hard. It's hard to do that to your clients, people that
Yeah.
you care about.
I haven't met
And
anyone who hasn't been guilty of that. I've been guilty of it. It's you feel like these are people that have been with me, like can I really charge them twice what they're paying me now?
hmm
I mean, you could. It's just, yeah, it is very emotional, isn't it?
yeah. And the thing is, like, they probably wouldn't care to leave you.
Right.
Like some might have some emotional attachment to you, but more than likely they're gone, like in a heartbeat, if they know like their friends charging them $200
Mm.
down the road potentially. So like you have to think about it from their angle. How much do they care about you? And then how much are you caring? Why are you caring so much
Yeah.
about it? And just just gain up a lot of courage to do it. And that's why I've been so transparent about this process. Like last year, I told everyone exactly how it went. A decent amount of people left last year, but I still came out ahead a
Yeah.
lot. And I want to encourage other accountants, other firm owners to do the same because it's a hard process. They need like some encouragement to do it and know that it's going to be okay on
Hmm.
the other side. Because
Yeah,
yeah.
we're afraid. We're afraid that we're going to lose all our clients and we're going to lose revenue and it's going to hit our bottom line. But I've never heard of anyone increasing prices. Well, I guess I have heard of one listener on my podcast increased prices and lost like 10% of their revenue net. But
Mm,
but they had done it, like they had way underpriced the clients for a really long time and did a massive increase. And
hmm
that's where you get people that are just like angry then. Even if they've been way underpaying for a long time. If you do it all at once after many years,
mm,
people are going to get frustrated and leave, right? It's an
hmm
emotional thing. So,
Yeah, that's hard. That's hard to do something like that. I'm glad I didn't get myself in that situation.
you got to raise the temperature gradually, right? Um, so and you got to communicate it, right? Like you got to, like, it's hard, whenever you're raising prices. I get these emails, when my services go
mm,
up, and like
mm.
there's a right way to do it and a wrong way to do it. Do you have any tips for how to raise prices and communicate that to clients in a way that, doesn't get them angry or doesn't result in you having to have a tough conversation? Are you, like, What have
Yeah.
you learned after the last 3 years of doing it?
Yeah. So it's not as bad as you think it will be. The reactions from clients will not be as negative as you expect them to be, unless you're doing that crazy price increase because you haven't raised your rates in 20 years. So, but from my standpoint, like I haven't had any clients blow up on me. So take that into consideration. Like even if you don't really communicate it very well, you're not going to get a lot of heat from your clients. From my experience. Now, I've created an email and a template that I've shared with other people. So if those that are listening are interested in it, if you follow me on Twitter and subscribe to my YouTube channel, I know it's salesy, gimmicky, but I'll
It's
send
good. They
you
should.
I'll send you
You
that
will learn a
template.
lot.
Yeah.
Yeah.
I'll send you the exact same thing I sent my clients. And it's
Sweet.
very it's and it's an email. A lot of people will call. And
Oh
I'm a
yeah, I wouldn't
millennial
want to do that.
and I hate talking to people on the phone. No offense to any of them, but like it something in our blood just doesn't like picking up the phone and like calling someone takes a tremendous amount of energy for me at least. So sending out an email, or you can make a video of it if
Yes.
you want to be more personable. And it can either be you calling them by name, so individual videos, if you really, really care about it and want to provide some excellent customer service. I was at the point where like, I like these people. I'm going to send an email that's pretty neutral and be real with them a little bit, but not be completely real with them. So it's a pretty like standard email. It doesn't go into real depth on like the whole, like I'm dying here in my firm and I need less clients.
Yeah, yeah, yeah. They don't want to know that.
Yeah, it's
Oh,
very approachable and like it's worked well. And two people have left, and pretty much everyone that has left the last 2 years because of those emails are from clients that like took up the most amount of time and were paying the least amount of money, like the 80/20 rule.
mm-hmm.
And it was like amazing to have all those clients leave. And it's like, oh my gosh, like that was perfect. That worked out perfectly because the goal of these price increases are to hopefully, reduce those clients
Yeah, that's a
and
really good
increase
point.
capacity. So
Yeah,
it's like
not every client's equal.
yeah,
Oh,
some I
uh,
care about and I didn't want them to leave, but they left, but that's okay. Yeah.
so one of the other things you mentioned that you're doing that's unusual in our profession is you're working on getting more upfront payments
Mm,
instead of charging people after you file the return or after you complete the return before you file,
mm-hmm,
which seems to be what most people do.
mm.
You're doing upfront. Um, how much of your client base is going to pay you upfront this year, and are they paying 50%, 75%, 100%? How are you
Mm-hmm.
setting it up?
Yeah, Blake. So this past year, I started to dabble in it. I just did like $150 deposit when you sign the engagement, and if you, depending on the package you chose, like if you chose my middle tier package, you'd have to pay up for those services all up front. So year-round access for quick questions and IRS notices assistance, and so you had to pay a pretty big chunk of money right up front because if I'm providing those services throughout the year, I think paying for it up front makes sense for that. Before I would spread it out over 12 months, and that just created like an administrative nightmare and caused a lot of pain because clients would be like, all right, it's November. Why am I still getting charged by you? And I'm like, well, it's because you
Right.
chose the subscription and there's like two more payments left. It's okay. And there's a lot of that because people don't
Yeah.
read the agreements that they sign. And so I think paying all up front. And so this next year, 2024 for 2023 tax returns, I think I'm going to do either 100% upfront or 50%. Like, I think I'm leaning more towards just go 100%
Yeah.
because the admin of doing, you know, that means I just have to go into Ignition and click more buttons, and I don't want to do that.
Yep.
So there may be an instance where I still have to charge them for, something that was out of scope, or like, something new happened, or, that, the return was more complicated. So I charge them again, and that's okay. But if I can get all of the money up front, then like no pay, no play, basically, is
Yeah.
how it's going to be this next year. And it's hard. It's a hurdle to get over, because you're like having, looking forward to that money that's coming in because you did the work is like motivation. So like, oh, as soon as I do this return, I get paid. And I thought
Right.
like, well, what happens when I'm already paid? Am I going to want to work? Like, I think I joked on my live stream, was like, do I just January 1st, all the money comes in, all the deposits, do I just leave the country and just ghost everybody and never come back?
I think that's happened before. Yeah.
People do that. Oh
I
God.
think I think it has. But generally, it would be like a retail tax prep
Uh-uh.
kind of place.
Liberty tax, yeah.
It could be a story for Oh My Fraud, the Greg Kite and Caleb Newquist podcast.
Hear
You
the
could call
story of
them,
Logan Graf. Just
yeah, just absconded with all of his client tax deposits. I think. Well, I mean, what you're doing there is smart, because you're saying to your clients, look, if you want me to do your return, pay me now, and that way how many you actually have, because they've committed the money. It's
yeah.
one thing to say, yeah, I'm going to have you do my tax return. It's another thing to actually have them pay.
Mm-hmm.
And then I wonder if when they pay up front 100%, it motivates them to get you the information you need to do the return more.
Oh
right?
yeah. I'm hoping that happens. Like, I've already
Yeah.
paid this guy money. I need to get my stuff in, because I have
Yeah.
like 5 to 10 returns where I still don't have anyone's information for 2022 tax year. Like, am I preparing a return? You pay me a deposit. What happens? What happens now? So,
Well, yeah. And then now you're going to have to help them sort out the fines and the penalties, and it just creates more work for you.
mm-hmm.
And they probably aren't happy to pay for that.
Yeah. So I've heard from other colleagues that do 100% upfront for tax returns is to almost like have a separate account that the money goes into, and then when you do the return, you move that money over. That's more accessible,
Like a
so
trust
it's
account. Yep.
right. So it's more accessible. Like, so there is that hurdle of like, okay, I haven't earned this money yet.
Mm-hmm.
But then again, I'm like, it's like accounting, like extra accounting work that I have to do. So maybe, yeah, we'll see. I'm excited to do it, and maybe it also helps reduces the client load, because they're like, I don't know, they have some sort of weird objection to it, and
Right. It's another barrier to working with you, and in
mm-hmm.
a supply demand mismatch. Right. You can
Right.
ask for this, right? If they don't want to pay up front, they can go find another CPA who will do after the fact.
Mm-hmm. And now
But
that I have
that
an employee,
CPA, go ahead.
good. Now that I have an employee, like, it's great to have that money available, so I know like I can pay my employee, like,
Yes.
instead of burning
Yes.
through cash waiting for their return to get in.
Mhm.
Because if I'm paying him up until April and they don't give me their stuff until April, let's say, I would never prepare a return that late, by the way. Let's say if they do, well, I'm paying Gary for 3 months and he's not doing anything. And so, like, where's that money coming from? That means I have to be extra careful with my cash flow.
So you're sending out proposals via Ignition.
Mm-hmm.
Have you started doing that yet? Are they going out? When are they going out?
My initial goal was December 1st, which is a week from Friday. So, or a week in a couple days from now. And, it's holiday season. I don't know if that's a good goal for me. So I might extend it to middle of December and say, hey, you got 2 weeks. You got till January 1st to sign,
Mhm.
and have some sort of timeline component just to get people on the ball. Just because that just helps everything flow much nicer. Because if you're waiting until February to get an engagement signed, that just means you're spending that mental energy thinking about them on if they're going to sign it or not, or come back, and that creates just extra time in your life, and I don't want that. So I think I saw Laurel and Wilson kind of do this. She's like, hey, if you don't have it signed by then, I'm not working with you.
Right. And you
Like
can do that in the software. You can set the proposal expiration date. So it's, if you want to work with me, sign by this date, right?
right, yeah.
Or you
And
can withdraw them. Yeah.
yeah, just like be like, whoop, sorry, it's
Yeah.
gone. The time
And
is gone.
well, and maybe, I mean, have you thought about, you said that during tax season you raise your price sort of informally, but I mean, could you not also say like, hey, if you don't sign by this date, like the prices go up starting in January every month, right?
hmm Yeah, that's been a feature request. Like, hey, can we increase the fees automatically if they don't sign within a specific amount of time? Because
Yeah.
that would be cool, and that's something I should definitely consider to get them to sign as soon as possible.
Yeah. I mean, that's basically how software sales work, where like a good salesperson will always create pressure, like time pressure to sign like, okay, this pricing is only good until the end of the quarter, right? And then it
hmm
resets, right? Because we're trying to meet our goals. And like we can do that in accounting too, right?
hmm
There's no reason.
Yeah,
Otherwise,
pricing is
otherwise it
so
goes to
fun.
the bottom of somebody's list, you know?
hmm
So,
I think accountants need to be trained more on pricing. Like I would love
yeah.
to help lead that charge of pricing. Blair Enns, he wrote Win Without Pitching Manifesto. Also wrote this book called Pricing Creativity, and he he it's almost like a booklet, I guess. Garrett Alexander recommended it to me. He's with Game On Financial. They do like accounting and taxes for content creators, and he recommended this book, and it's amazing. And like we just need that book for accountants essentially,
Yeah.
uh, to get more creative with pricing, because we're so logical and linear, and don't introduce any psychology at all when we price, or at least most of us don't.
And it's all
And
psychology,
yeah,
you know?
right, yeah,
Yeah.
like we're
That,
so like cost accounting wise.
and I feel like the biggest barrier is for accountants in general to generalize is that we want to have just one price. We want to know this is the right price.
Mm.
But even for an individual, like if you're pricing one client, there's a range of prices that might work for them. And so one way I deal with this personally is I'll say, okay, what is the least I would ever charge this client?
Hmm.
Like what is my lowest price? And then what is my like highest price I could say to them without laughing? Right? If I'm on a call with you, Logan, and I'm pitching you on my, I don't know, consulting services or something, right? What is the most I could say and not like giggle, or be embarrassed, or worry about you just like getting up and leaving, right? And so then your price that you actually go for is going to be somewhere in between those two, right? And ideally closer to the high price than the low price.
hmm
And like just doing that exercise, like for every client, I feel like helps, get to that number that you actually say out loud.
hmm
And unfortunately, a lot of time the number we say out loud is the lowest price.
Mm. hmm Yeah,
So
it's weird. Like, why can't we be brave, uh, live when we say that price?
yeah, it's a little scary, right? I mean, and this is the thing about negotiation is if your client is a business owner, I think that's the hard part is a lot of times our clients are entrepreneurs and they're skilled in the art of negotiation. So here we are, we've never been trained to do this, and now we're having to basically negotiate with somebody who has been doing this a lot more than us most of the time.
hmm
So that's scary.
It's always, yeah, whenever clients do push back with me, I'm like, whoa, I'm not prepared for this. Like,
Yeah. Hey, well, this is something that AI chatbots are fun for, is practicing negotiation, or
oh,
like you could actually use like Claude or ChatGPT to like practice, like, okay, here's the scenario. Can you help me?
how would you
Train
handle
me.
this?
Yeah, how would you handle this? Or even just like paste in the email from the client if they're pushing back and say like, how do I respond to this?
Wouldn't
It
it be
might,
great if we had that sort of assistance while we're live. Like it's listening to us. It listens to the client as well.
Yeah.
There may be some ethical things about around that, but
And it
you can
coaches
like
us.
you can look to the side and it just types in like,
Yeah.
all right, here's the prompt what to tell them, like
Oh my gosh.
as a rebuttal, like a
Logan, I
live.
think we just came up with like the next great AI tool for accountants right here is the live negotiation sales coach.
Yeah. It's like, no, don't do that.
Yeah,
It
yeah,
just
yeah, yeah.
like gives you live
Yeah.
feedback. Like
Like red alert, red alert.
now
You're totally
offer
blowing this sales call.
abort, like just leave.
Just leave. It just ends the call. If you go way off track, it just ends the call. It's a courtesy disconnect,
Yeah.
you know?
We're sorry, we're no longer a good fit.
Yeah, exactly. Oh man. So going back to the upfront payments with Ignition, are you going to require the payment when they accept the proposal?
Always.
Do you take credit cards?
Yeah. So last year I bumped up 13% for everybody because I knew, and I wasn't going to give them a cash discount, well, ACH discount. And because I was tired of doing admin work trying to figure out, okay, they paid with ACH, what's the discount on that?
Yeah.
And it was stupid. I was stupid. But, and so I was like, all right, I'm not doing that discount anymore. So I'm bumping everyone up 13%. It was going to be 10%, but I knew everyone would switch to their credit card since that 3% covered that. And so it's kind of a chess move almost. And I I shielded it as like inflation, you know. So it's kind of
Always
indirect
blame
around
inflation. You know, inflation gives us a hard time. We should benefit from it too, right?
that. That's
Yeah.
right. Yeah.
That's right.
Why not? And so where was I going with that, Blake? Oh, the credit card fees. So this
Yeah.
year, Ignition released a sweet feature where if clients choose a credit card, it gives them a little prompt like, "Hey, there's gonna be a X% of the fee going
Yeah, yeah. You
to
can pass it
credit card."
through. Yeah. Are
Yeah,
you going to do that?
I think I am. Yeah,
Yeah.
I'm pretty sure I am because credit card fees, like my Ignition software cost for this year is like triple the amount because
Yeah.
everyone selected credit card. Even though I netted it with price increases, clients can choose now to take the hit, and it helps me like not have to figure out like, okay, if they do pay with credit card, what would I charge them? Instead, I can just give them the price and then they deal with it on their end, and you can select what percentage. It's a firm wide percentage, so you can't like select what percentage for each client, but it's like it'd probably be like a 3% fee that you can pass down to the client.
Yep.
And that's probably what I'll go with. And yeah.
It's funny. There's a lot of debate about whether or not you should pass through the credit card charge, and I think in theory, like a pricing expert or will tell you that it's best not to charge the extra fee. That it psychologically, you know, lowers your like total business, right? You'll make more in the end if you don't. But I feel like that might not be true if you pair it with the ACH option. So if somebody doesn't want to pay the fee, they can always pay with ACH. And they're a business, so they've got a business account, right? They can do it, and it's not hard. So I feel
Right.
like that's good. If you have the ACH option, it's okay to pass through the fee.
Yeah. I
That's to
can
my
see
gut
that.
feeling.
Like giving customers multiple avenues for paying you always increases the rate of closing, I believe. And so our customers going to see that surcharge as like a barrier to working with me.
Mm-hmm.
There's some clients that are heavy like credit card dependent, unfortunately. And can they afford to even do ACH, which is worrisome. But like would that fee be a non-negotiable for them? So
I guess they can always
we'll
tell
find
you,
out.
right? And then you can decide on a case-by-case basis what to do.
Yeah. Yeah, we'll
If they're
find out.
arguing with you over 3%, they're probably not the best client, right?
Right.
Like,
And if they
yeah,
get it back on the awards, the cash
right.
back,
So they
then
can go take that trip to Europe and not have enough money to pay their bills.
y'all were just talking
Yeah.
about that on on the podcast, like the rewards, like the mileage versus rewards. And I think
Yep.
you just were like, I'm just doing the cash back. Like,
I found it took up so much of my time to try to like game the system to use those miles. I just simplified my life and now I just have a
yeah.
cashback card. And whatever. Maybe I'm losing out on like an extra 1%. All right. But like to me that the time was not worth it.
And the IRS says it's tax free,
The
right?
cash rewards, I guess. I mean, if the miles are tax free, right? The cash rewards should be too.
Yeah.
I don't know. Nobody's ever asked me about it. And I don't do my own tax returns. So hopefully my preparer isn't listening.
Wait. What?
Yeah. Right. But that's not something that like is like, did you receive any, like, I don't get a 1099 for my cash back rewards from my credit card company.
Right. Yeah. Like there was a court case that pretty much said like it's not taxable. There was
Yeah.
in some circumstance where they were like gaming the system, I think, with gift cards.
Oh, yeah. Well,
You know what I'm talking about?
there was a case where are you talking about American Express?
Maybe.
There was like a situation where Amex was like aggressively signing up business owners for their corporate cards, and like they had a presentation that they had formally given, that were doing, where it was like, here's how to evade taxes with your put everything for your multi-million-dollar business on this card, right? And then we're going to transfer the points to you personally.
Uh,
That's what they were doing. They were taking the points from the business and transferring it to the individual, who was then cashing out the points and making, tens of thousands or even hundreds of thousands of dollars. And I feel like that's when they got in trouble.
Then the IRS is like, that's like a business right there.
Yeah.
So
Yeah.
we're taxing that.
Pigs get, what is it? Pigs get fat, hogs get slaughtered.
Yep.
Yeah.
It'd be like that.
Okay, so upfront payments. In order to do these upfront payments, you got to know what you're going to charge the client. I guess for returning clients, that's not bad. You've already repriced them and stuff. For new ones, you have a productized package offering on your website.
Mm-hmm.
It looks like you have 3 tiers.
Mm-hmm.
There's the compliance tier, which is, I do the return, right? That's no advice, really, right? No planning. And then you have these other tiers where you don't put the pricing on. You have collaboration and concierge.
Yep.
So tell me about those packages. Are those new this year? Is that something you have been doing? Like, how's that going?
Yeah, I think I'm pretty much keeping them the same. And the big distinguishing factor between last year is getting paid up front for everything. Well, the thing with business returns, though, business entity returns, I do allow payments to be spread out over the calendar year, depending on when they sign. So it could be 12 payments if they sign in January. And I do that because those fees are a lot higher. And I'm okay with getting paid over 12 months because it also helps spread out the cash flow. So I'm getting paid in November and December.
And I assume that with most of those returns, you're extending them, right? Not doing them until September or October.
Yeah, a decent amount.
Yeah.
I'm doing them in the middle of the year. So it's okay to spread those out. Well, 1040 is getting paid all up front. But yeah, with my packages, I try to design my packages to where the middle package is the best looking one and the least amount of work. So I try to maximize profits, minimize capacity, essentially, with that middle package. Because if you put too much in that middle package and everybody signs up for it, you have a lot of work to do. And the way I design the pricing is to make it valuable, or seem like a lot of value for something that won't cause potentially that much more work. but is still valuable in the client's eyes, in the
Mm-hmm.
customer's eyes. I'm not trying to rip people off. Okay.
No,
That's
but you're
important.
doing price anchoring, right?
Hmm.
Which is a classic
Exactly.
strategy where the highest tier, which is the concierge, which is everything, all the bells and whistles, is pricey, right? And
Hmm.
some people want that and they'll pay for it, but most people that's overkill. But just by having that really expensive price there, it makes all your other services seem like a deal in comparison.
Right.
Yeah,
Yeah, exactly.
it's like
I'm really proud of so I have like two separate proposals for personal and business, and I'm really proud of my middle package for my business return clients because I think it's the best bang for your buck on in my opinion, for the client and for me. And that involves year-round access for me to me for quick questions. So basically, I'll answer any email, phone call, virtual meeting where you have a quick question. So something that doesn't involve, some in-depth projection work or in-depth scenario running or research, essentially. And so clients are encouraged to ask me questions throughout the year. So that's great for business owners. And then I'll have IRS assistance, notice assistance, where if you get a notice, I'll help address it, and then tax projection as well in the fall. So really, it's like everything you need as a business owner, in my opinion. And then, but personal level, it's harder to do that because the way I do it is I send out like pretty much all of my personal tax return proposals at once to try to be the most efficient with that. And so I have to create packages where that it suits the wide range of my clients. And so I have to be a little more limited on what I offer in that middle package. So in the middle package with personal, there's no tax projection.
mm,
Because usually if you need a tax projection, you have a business entity. That's kind of been the deal. And I think that's why I designed it that way. Now in my live stream, I told everybody watching that you could take my basic package, my compliance package for either personal or business. And if you're new to creating packages, you could separate out what I offer in my basic package, compliance package, into 3 different packages. Because in that basic package, I offer a lot of value, in my opinion. So I know I keep saying that, but just want to.
it's all subjective,
So it's
right?
subjective. So
Value is
yeah,
subjective.
exactly. If you're like not charging that much, if you don't feel like you can charge that much, well, you take my compliance package and you only offer tax return prep. You
Yeah.
don't let them be subscribed to my newsletter. You don't do a video summary of the tax return. And right there that could be your middle and higher tier packages. And like I thought about it, I was like, oh, I could do that. I could separate my basic package for the clients that always choose the basic package. Then I could upsell them with a tax return video summary. But I'm at such a high minimum where it's okay for me to include those services. That's how I charge so much, and how I believe I can charge so much because I'm providing that value at that basic package.
Mm-hmm. All right. One more thing I want to cover before we go, and that's the project tracking system, because you mentioned that you have integrated Ignition with your
Airtable,
process Airtable for tracking the
yeah,
returns, the status, and all that. So, like, is it magical? Like, when somebody accepts the proposal, what happens?
it shoots it into Airtable. I have it where it'll shoot the project, all the proposal details into Airtable. So it'll separate all the service items that I've created for that proposal or which one they sign up for. So it'll be like tax return, accounting, uh, tax projection, other stuff that I need to track that will have deadlines, and it'll separate all that into Airtable, and I can customize what I see, and I can create all these different views on, here's all my tax return projects. Here's all my projects that I've assigned to my contractor or my employee. Here's all my non-tax return projects that I need to take care of. And it's a Frankenstein operation. So I don't know if I'd recommend doing it this way, because now that I'm building my team, like I have to figure out now how I'm going to like give them access to it and
Right.
to only be able to see specific sections of it. But if I could get even more creative, I want to this before year end, before my, proposals start getting accepted, is to be like, once a project does get into there, it'll create different timelines so I can track things better. So it's really easy to track tax returns because it's like a one-off deal.
Right.
Like you're extended and you're not extended or you're extended. So there's two different deadlines. But when you have like monthly accounting work or maybe quarterly accounting work, I need to create an automation in Airtable where if it sees a specific service that was accepted, it then creates, let's say, 4 different timelines or 12 different time tasks where I can track that project. So I just need to get in there and nerd out.
So it sounds like you're planning on sticking with Airtable, not considering accounting practice management software at this time?
Right now, and next year, I'm going to highly consider ClickUp, because I think ClickUp has a similar interface and similar capabilities but it makes it more like easier to use for teams. So
yeah, I was a big Asana user for years, and then ClickUp came along and became like the new Asana.
Oh yeah,
I used it for a little while, and it's pretty impressive what you can do with it.
Okay.
Yeah.
Cool.
I know Brandon Hall uses it at the real estate CPA. At least he did last year, I think. Probably
Yeah, if
still
he
does.
uses it, that's like enough confirmation that I should probably use it.
I've heard great things. It's funny. It's really interesting. Like, we have all of these practice management solutions in accounting, but then there's also the general purpose software. And I find when I talk to firms, there's just a huge variety. Maybe half are using the specific, or no, it's more like a third have nothing. Or no, maybe it's half have nothing. Half have nothing at all. And then like a quarter have some accounting specific thing like a Carbon or a Client Hub or a Financial Sense, right? And then the other quarter are just using general purpose, Teamwork, ClickUp, Airtable. Nobody has won this market yet.
Nobody.
Nobody.
And like, is it possible?
Maybe not, because everybody has a different way of running their firm and has different requirements, and you can't possibly solve them all. So
like, why not? Why not? Like,
why not, right?
Like I've been dying. I'm tired of all these softwares, all these apps. Like I have change fatigue, I called it improvement fatigue.
Yeah.
I'm tired of improving with these apps and like constantly having to do that.
And I'm sorry to say that as you grow your firm, it gets harder because then you have to train everybody. And then once you've trained everybody and you've got data in the system, switching becomes a huge cost. So like, you only want to ever have to switch practice management software like once. I did it. And I only had a firm with, say, 12 people in the system, right? And it was still like switching out was so bad.
Yeah.
But we had to,
Oh, I'm really tempted to try to do something with the Microsoft ecosystem. Yeah. Because if you can get one ecosystem to do everything, then it theoretically makes things simpler. But the Microsoft ecosystem might not do specific things that I want it to do.
It's getting better, though. I mean, Ashley Francis is like the huge champion of Microsoft. And like just listening to her talk about what you can do with Power Automate and all that these days. I mean, it's getting easier now with AI. So maybe that's the way to go, is just go all in with the Microsoft. I'm a Google Apps person personally, which has always been a point of tension for me with, anything accounting, because like I've used it ever since college and I love Google Workspace, and I just like, I can't use Outlook. I can't do it. Like and it's, I know I could, right? Maybe I'm getting too old now and I can't learn new things. Like I've reached that stage in my life. But
like Adam Grant, what did he say? Like, if you've been a tax accountant for 20 or 30 years, like the newer accountants know the new tax laws more than you do, because the older you get, like the less you want to learn new information or something
Yeah.
like that. I don't know.
He was one of the speakers at QuickBooks Connect. I unfortunately didn't get to see him.
That's where I got that from, because he was like
Mm.
talking about, he's kind of burning all these older preparers, like, hey, y'all aren't like learning new things.
It's hard. I mean, everything's changing so much all the time. I
Mhm.
guess all the
I
tax
understand.
changes, like,
Yeah.
and you came into starting your practice when I think everything was really, all the shit was really hitting the fan, right? Like that must have been wild with like
It was,
TCJA and all that.
yeah, that was a little bit before I started, but that was
Yeah.
still like relatively fresh. Like, hey, how do we account for this still? But I was just watching I was doing research for a video that I'm gonna make tonight, hopefully. It was like this 1940s video of like what are accountants and what are bookkeepers, and they actually did a great job explaining the two. Like, here's what a bookkeeper does, here's what an accountant does, here's what a public accountant does, and it's in the 40s. And not that it's changed very much, but even then, I posted a clip of it on Twitter today. But even then, they're like, the tax laws are complicated to where nobody knows what should be counted as income and expenses. Like even back in these, they're like, yeah, man, taxes are complicated. Like think
And it
about,
was a piece of cake by comparison.
yeah, think about it now. Like,
Yeah.
oh my gosh.
It's so bad now. Have you tried the CapCut plugin for ChatGPT
No,
to make videos?
should I?
It's kind of hilarious. So like, can I show you this right
Please.
now? Since we're at the end of the video and the education has ended, and now this is just the fun part. We've reached our CPE requirement here. I want to see if I can share my screen, and then I'll share the tab audio here. So like, you're gonna make a video, right, about bookkeepers versus accountants. So like,
That's
I
not my
want to.
video, but the video that I was watching was about that. Yeah.
Okay, so we could actually like try to use ChatGPT to make one,
Okay.
and I think let's see. So the prompt is, we got the CapCut plugin turned on here, and then the video editor suite. So we can say like, write a script. I don't know, 200-word script about the differences between an accountant and a bookkeeper. Use words, like make it so a 12-year-old could understand. Then make the video in CapCut, and you just type that, and then it's going to draft a script using its knowledge.
Yeah, 200 words should be pretty simple for it.
Like a minute or two, right? So it's drafting the script here, and it's got a few paragraphs. All right, let's make the video using this script. And now, theoretically, ChatGPT is going to go to the CapCut plugin, and it's going to actually create.
They're gonna pull B-roll in there and
it's going to pull in B-roll.
narrate it.
Yes. So here it goes. It's using CapCut.
I mean that what it's talking about in the script was pretty similar to that 1940s version.
I should have asked it to do it in a 1940s style. It could probably do that too. Okay, so here's the video. I click the link, and now we're opening up CapCut.com.
Can you make revisions?
You could, yeah. If you log in. So now it's loading the video.
Hey there. Today, we're going to explore the differences between an accountant and a bookkeeper in a fun and easy way. Imagine you have a piggy bank where you keep all your money. Now, let's see how a bookkeeper and an accountant would help you with your piggy bank. First, meet the bookkeeper. Think of a bookkeeper as your piggy bank's best friend. They keep track of every coin you put in or take out. They write down when you saved money from your allowance or spent some on a new toy. Bookkeepers are super organized and make sure every penny is accounted for. Now, let's talk about accountants. An accountant is like a wise advisor for your piggy bank. They look at what the bookkeeper has written down and then give you smart advice. They might help you plan how to save more money or explain how much you can spend on treats. Accountants use their special skills to make big decisions about money. So, in short, bookkeepers keep track of the money details, and accountants use those details to help make smart money choices. Both are important, and they work together to keep your piggy bank happy and full.
All right, Logan, what's your verdict?
That's awesome. I was like, why is this so basic? Because I remember you said for a 12-year-old to understand. I was
For a
like,
12-year-old to
okay,
understand,
that
yeah.
makes complete sense now. That was awesome.
Well, it makes it. I think it helps when you make it for a 12-year-old to understand, considering that the video is about at the level of what a 12-year-old could make. So
Yeah.
yeah. But I mean, think about, like, this is incredible. Imagine, like, when we'll be able to make videos about tax topics, and this can help.
Oh,
right?
I'm
You
so
can
excited. Like,
speed up your production process.
totally, like the script itself.
Yeah.
Like you could just have it produce that script
Yeah.
and go from there. Like I created a video for this nonprofit that I help with that provides summer camp experience for foster teens. And I gave it my script. It's like a rules video for camp. I gave it my script and I said, rewrite this in Mr. Beast's voice.
Oh,
Because he's
yeah.
so engaging. The kids know who Mr. Beast is most likely. And so you can basically feed it something and just be like, hey, make this. Like, I want to write something and say, like, okay, now rewrite this in Ryan Reynolds' voice because he's going to make it entertaining.
That's a good idea. I might try that. For my next script. Yeah.
It totally resembled it, like the Mr. Beast, like timing. Yeah.
Well, Logan, it's been awesome talking to you.
You
thanks
too,
for joining
Blake.
me on this Wednesday before Thursday Thanksgiving. I'm very thankful to have chatted with you, and we'll get this out like as soon as we can, so that our listeners can enjoy learning about what you're doing and hopefully get something out of it and do something different themselves before January.
They got time to do something about it.
Yeah,
hopefully.
There definitely is time, right? It's like, and I love the holidays because as an accountant, you always have an excuse to avoid your family. If you really don't want to be, like, as soon as somebody brings up Gaza, or like Trump, you just like go upstairs, say, sorry, I got to do some prep for my busy season, right? Like,
I got to increase my prices.
Yeah. All right, Logan. Well, have a great Thanksgiving and eat a lot of turkey or whatever you eat.
I will do. You too, Blake.
Can't wait to see you around again at the next Connect.
For sure. Yeah. Talk to you soon.
Thanks for listening. I hope you enjoyed this episode and that you learned something new. And if you did, wouldn't it be nice to get some CPE credit for it? Well, I've got great news. My new app, Earmark CPE, offers free NASBA-approved CPE credits for listening to podcasts, including this one. Visit earmarkcpe.com to download the app, take a short quiz, and get your CPE certificate. That's earmarkcpe.com.